problem, and the comprehensive problem is basically on fund accounting, which is what we're going to have on the test. The test will be emailed out after class, and I have to explain problem 10. I'll do that later, though. But we're going to do the comprehensive problem, and basically, the journal entries and a little bit of follow-up on the journal entries as far as what do they actually mean. That's in the comprehensive problem. The comprehensive problem, there's 3 different flavors of it. There's Excel, Word, and PDF. I'm going to do it in Excel just because I think it's easier for me to do it this way, more legible. Oh, I know what I want to do first. I want to talk a little bit about, I sent this out, I believe I sent this out earlier. I think it was one of the first things I sent out for this chapter. And it's kind of like a chicken and an egg thing, do you start giving out all the different funds and they don't mean anything to anybody? But then, you start doing the journal entries and stuff, and then some of the funds might mean something more. And so just kind of revisiting the kind of stuff that we've talked about, for the different funds. And we've obviously done a lot with the general fund. And so you guys kind of know what that is. Special funds, those are usually special revenues funds, and that's where you can only use it for a specific purpose. We've talked about those. Debt service funds, we've talked about those. Capital projects funds, we've done those. We didn't do any of these. These are kind of wacky. And sometimes there's a lot of times places don't have these too. Sometimes they do, but. Okay, the proprietary funds, we've talked about these, but they're a little bit different. They kind of split them up. These are proprietary funds are run just like regular businesses. But there is a difference between enterprise funds and internal service funds. Enterprise funds, these serve the public. Zoos, airports, all that kind of stuff. Stadiums. They serve the public. Internal service funds only serve government agencies. Okay, only. All right, so internal service funds are generally considered part of the governmental activities, whereas the enterprise funds are the business type activities, but these only serve government agencies. For instance, let's say they have a garage that you take all the police cars, all the fire trucks, all the street and sanitation trucks and blah, blah, blah. And they all get served, buses, they all get serviced at the same internal service, but it's a garage, the municipal garage for whatever city it is. It doesn't make sense to have all those different groups have their own mechanics and all that. You can just bring them into one place, they have all the equipment and blah, blah, blah. Well, that's only for the government though. The public can't bring their cars or trucks into that. So the internal service ones are kind of what they said, internal. You don't take external, you don't take customers from outside. They only serve the government agencies, but they're still run like a business. And we didn't really talk too much about these fiduciary funds. This one is a little bit something we should know about. And by the way, I think that this came from a review for the CPA exam, if I'm not mistaken. But basically, for fund accounting, that's the wacky one. We break up the financial statements. We have financial statements for government funds. And then we have the proprietary funds. Why underline? Hold on a second. I think I underlined the wrong thing here. I don't think that should be underlined. This should be underlined. And government wide, we're gonna have one of these, statement of activities. That's gonna be on the test. Cause this one's wacky. That's that weird one that we spent like half a class on, so. That's gonna be on the test. And then here, these are just kind of notes basically on how we do the different accounts and that. Again, this is something that kind of put together for, I believe this is when we did the CPA exam. So anyway. Hopefully that makes a little bit more sense now. Okay, so let's do the last problem of the class. So what we're gonna do is do the journal entries for these amounts they give us. And I'm just gonna do them right over here. And then we have to go through some of the, we're gonna go through some of the analysis, and this would be something like you would get for on the CPA exam. They might ask you, what was the difference between the estimated revenues and the actual revenues? A question like that. Okay, so I'm gonna shrink this maybe a little bit. Is that too small? I don't know if that's too small for you guys, but
That's good.
it's good. Okay. So I'm just gonna try to get these on one page. Okay, so and I mentioned it earlier, but I'll mention it again. So on the exam, the two things that you're gonna get for journal entries, you're gonna get the fund accounting. Why? Because it's the wackiest, it's the most unusual of the other two. Government wide is pretty much same as any other than revenues, but the revenues are handled exactly the same as in the fund accounting. So anyway, and then we're going to do and then the statement of activities, which I'm not going to do another one. We did a couple of those. I think it would just be kind of overkill and maybe boring if we did another one. But anyway, we'll go ahead and do the journal entries. And again, this is something you're going to see on the exam. So, okay, so here is our legal budget. So what's the journal entry going to be for that? I'll get us started. How about that? The first wacky one is the estimated revenues. And I say that's wacky because these are all backwards. Revenues, we all know those are credits. Not for our budget. Our budget's like a closing entry done on the first day. So the estimated revenues, this is the money that we're going to estimate is coming in, is going to be a debit. How about the estimated expenditures? These are appropriations. Are those going to be debits or credits?
Credits.
Yep. And now this is important. Make sure you put in appropriations. For whatever reason, on the CPA exam, they go berserk if you put in estimated expenditures. Make it very clear there is no such account as estimated expenditures, even though that's exactly what it is. Okay, now estimated other financing source. So is that going to be similar to a revenue or an appropriation or expenditure? So if this is a source,
It's revenue.
good, yeah, it's like it's similar to money coming in. Just put the bond. 2,000. And as you may guess, the other estimated financing use is sort of like a expenditure, right? It's money going out. We're not going to spend it, but somebody else is. So estimated other financing. Hey, I didn't put a D there. All right. Housing transfer. 30,000. Okay, and those do not add up. What do we need to make this balance?
The budgetary fund balance is the plug number that we need to put in.
And by the way, they go nutty on this one too. You don't just put in fund balance. For whatever reason, although sometimes places will do that. All right, what's the difference here?
I think it's 40.
Is it 40 or 4?
Oh, 4. Wait a minute.
Yeah, wait, let me
Yeah,
see.
4.
All right, so 4,000 credit, right? Okay, so this is a legal budget that you put on the books at the beginning of the year. It is basically a closing entry. And it's basically saying this, okay, if everything goes as planned, this is this budgetary fund balance, this is what we're gonna add to our real fund balance. When the real accounts come in. So if all the real accounts came in and equaled these that we estimate, the fund balance should go up by 4,000.
So Professor, you said they kind of funny about the budgetary fund balance. So what would they want to be there if they didn't want that?
No, they will insist that this be there. So
Oh.
so here's what they would do. They have a drop down and it would say, fund balance, budgetary fund balance unrestricted, all this other stuff. So when you click on it, be sure you put in budgetary fund balance.
Okay.
They're very specific on that. Now, in real world stuff, there's still a lot of places that just put it into a fund balance. And at the end of the year, they just reverse it out because it gets reversed out, it never actually hits the financial statements as a real account. If you put on 4,000 and take off 4,000 and then run your financial statements, which is kind of what you do at year end, it's going to disappear anyways. But the CPA exam is not. You have no sense of humor about that. You have to put it on as a budgetary fund balance and then take it off as a budgetary fund balance.
Okay.
But you will find places that actually just put it right into a fund balance and say, okay, if everything goes as planned, this is what we're going to have in there. And at the end of the year, they reverse it out and put the real one in. Okay, so B. Oh, encumbered purchase orders. Another thing that happens a lot of times at the beginning of the year is when they make their budget, they automatically go in and start encumbering all the purchase orders. And so that's just encumbrance account. right. Property tax levy, the net will be collected within 60 days of year end. So what's the journal entry on that gonna look like?
Is that what we use property tax receivables
Mhm.
for the 160?
Mhm. And usually we put those in as current, but on the test, we just put tax receivable, that's fine. What was it, 160? Okay, and then. Estimated collectible, and these are current year. Sometimes I put a the year right in, so it'd be 2023 or something like that. 1,000 and what's the last journal entry we're gonna have here?
The property tax revenue for 150.
Yep. If you put revenue, that's fine. And one of the weird things about governmental accounting, we don't talk about it as being earned. We didn't earn this money. It isn't like we gave a service directly anyways for that. So, you know, this revenue is different, and it's basically when you send out the tax levies, that's when you count it as revenue. Okay, so the rest of these are transactions that happen during the year. Well, that wasn't very spectacular. Let's try that again. These are transactions that happen during the year. So this is kind of, you know, first day or pretty close to it of the year. Put the budget on the books, encumber all the things that we have to set money aside for, and send out the tax bills. And the rest of these are kind of what happened throughout the year. So we're going to do the journal entries for these throughout the year. Okay. Property taxes collected 148,000. What's that journal entry going to look like?
Cash 148.
Yep.
Debited. And tax revenue would be credited for the same amount.
Close. This is from what we've already levied up here. Oh, did you say, I'm sorry, did you say tax receivable? Yeah, okay, so this would be. Oh, let me get this first one. So let's do 148.
Yeah, for the cash and yeah.
I didn't put something up here, right? This is gonna be an asset going up. Down here is gonna be that same asset going down. They no longer owe us. Oops. So this will be an asset going down. Okay. I'm gonna mark these as we do them. Okay, E. Revenues from fees, revenues from building permits, and revenues from parking tickets. You can put those all separately. You could also put them all as one. I think I'm gonna add the cash all up into one, even though that's really not what we usually do. Do I have enough room to do all of them? Maybe I do. I guess I could add in a row, right? Okay. If you're gonna do these individually, you'd have cash. Asset going up. And a revenue, and I'll clean these up later. You can also put all the cash into the same one. You generally want to keep the revenues separate if you can, because a lot of times they can only be used for certain functions. Okay, so let's do the first one, cash 32,000. And that was for fees. Second one, cash was 6,000. That was for building permits. The last one was parking tickets. You want to know something funny about the revenues from these other things here? I can't remember which there's a small town in somewhere, I think it's in central Illinois, I can't remember when it was, but anyway, this town, they have there's some kind of law that the trains cannot block the roads for more than 20 minutes. And it's right by a railroad switching station. So whenever a train blocks the track, they actually have someone walk out, with a stopwatch and time it for 20 minutes. And because they literally something like a third of the town's revenue comes from fines they give to the railroad. So, it's worth their while to have someone, it's part of their job that, they walk out with a stopwatch so they can hand out a ticket to the railroad. And it comes out to something like I can't remember the exact number, but it was something like 140 or 150,000 a year. Okay, let's go to F. Okay, encumbered purchase orders completed. Okay, so the encumbered amount was 110,000. The actual cost was 109,600. All right, so what would we do with the encumbrances?
So we would have to close those out first.
Yep, so take our hand off the money. $110,000. And okay. The actual cost was 109,600, not yet paid, used vouchers payable. Okay, they don't tell us what this is for, but luckily this is fund accounting. We'll put the vouchers payable in the books. $109,600. Okay. What's going to go on the other side?
The expenditures, but we don't know what it's for.
Exactly. Well, the nice thing about it is, now, truthfully, we would probably want to know what they're for, but they all are just expenditures. Hey, you put it here various, I guess. But, yeah, they all, it's just, you know, doesn't matter whether it's a truck or postage stamps or whatever it is, it's an expenditure. Building. Wages, all just expenditures. All right, gee, other expenditures not encumbered. Some expenditures are not encumbered. And those are usually ones that are recurring or not encumbered. For instance, employee salary, that's one of those things that everyone knows it has to get paid. So a lot of times those things are not encumbered. They can be, but usually they aren't. Okay, so other expenditures not encumbered, use vouchers payable. So what would those be?
So we just put expenditure for that one too?
The same as this one. Yeah, we just don't have to take the encumbrance off because there isn't an encumbrance. So if it's encumbered, we gotta take the encumbrance off. If they're not encumbered, you just put it on the books as a as an expenditure. You don't need to take anything off. And a lot of times the encumbrances are actually based on purchase orders. You know, there's not gonna be a purchase order for paying salaries. But purchase orders are usually for things that are one-off or something, that even if it's recurring, that it's special. Okay, so I'm sorry, bonds issued for cash. I'll do the easy part. So bonds issued for cash. Now, in regular accounting, we would call those bonds payable. That's the wrong amount. Sorry about that. Is that what you were gonna say? Let's try that again. Okay. Normally we say bonds payable, but we don't do that in fund accounting. We don't have long-term liabilities on the books.
So it's going to be other financing source.
Yep. Good. And that is actually not a liability. We don't have long-term liabilities on the books. That actually goes on the income statement. What we call the income statement, basically. So long-term assets go on the income statement as expenditures. Long-term liabilities go on also as money coming in. Kind of a weird way to think about it, but that's how they do it. Okay, transfers out. All cash. So that's going to be what? Other financing use. Transfers out 32,000. Cash. Okay, paid vouchers during the year. 170,000.
Vouchers payable and cash.
The vouchers payable liability going down. $170,000. Cash is an asset going down. So that's another kind of weird thing about this fund accounting. Long-term liabilities don't go on the book, short-term ones do. So the ones that we're gonna pay off in the current year, those are short-term, those go on the books. Long-term stuff ends up basically on the income statement. With long-term assets. They get netted out. Okay. So. Coming over here. One of the things that they like to do on the CPA exam is say, okay, how did the actual stack up to the the estimate. So, they a lot of times they'll have this basically on like either drop downs or multiple choice questions. Okay, so let's go through these and kind of figure out. Okay, our estimated revenues were 200,000. I'm gonna try to color coordinate these. Let's make that green. Okay, so estimated revenues. Yeah, we're centered. Okay. Actual revenues. Okay, we have to add up our actual revenues. Now I'm really regretting not lumping all those together. You have to add all three of them up separately. Okay. All right, so I'm just gonna have on the side here. $104,000. Okay, and was the difference positive or negative?
Positive.
Positive. So subtract 200 from the 204. And we actually collected 4,000 more than we thought. We estimated it at 200,000. We actually got 204. That is the difference. Okay, estimated expenditures. Now remember, those are the appropriations. Let's make those, I don't know. That color. Okay, so these are the estimated expenditures were. $188,000. And we need to find the expenditures. Here's one. Another one. Is that it? Okay, I guess that's it. All right, I'm gonna add those up. $175,600. All right, the difference was. I don't know, what was the difference? And is it a good difference or a bad difference?
Good difference.
Good difference, right? So we have more revenues than we thought, we have more, or less expenditure, excuse me, than we had. So this is a good positive difference there that we're gonna add in. Okay, other financing source, bonds. And actual bonds issued. Same amount, and you kind of. I mean, that makes sense, that, you know, if you're gonna issuing bonds, you go through. You know, registrars and all that kind of stuff. The difference is zero. It's usually a fairly rigid process. Estimated other financing uses transfers out. And blue. Ooh, that's too dark. Get a lighter blue, okay. $30,000. Actual was. Oh, 32,000. Difference up here. Okay, so the difference was 2,000, was this positive or negative?
Negative.
Negative, yeah, we thought we were gonna send out 30,000, we actually sent out 32,000. However, that came about. Look at. Later, I guess. Okay, property tax receivable at year end. All right, well,
Is that the 148?
yeah, so we take the 160 that we had on the books. This is color. Okay, that looks. And. I lost, oh, here it is. All right, so tax receivable, we had 160 on the books, we collected 148, so whatever the difference is. Paul? Yep. Okay, so this is the collected. And so this will be the ending. Taxes receivable or property taxes receivable if you put property on there. Encumbrances outstanding at year end. Let's see. Okay, covers outstanding was 120 or 120. We took 110 off the books. Um. Okay. Give me a second to clean this up. Okay, so completed 110. And so at year end, there's what, 10,000 outstanding. And usually what they do is they'll determine whether if they're gonna want to see those through or not. It is possible that a lot of times they'll just take them off the books and then put them back on, and sometimes they'll put them back on with with the date of the previous year. For instance, if they ordered something, it came out of the previous year's budget. You know, you don't want that hitting the current year budget. Right, you know, if they ordered whatever, they ordered a copy machine. And they're waiting for the copy machine to come in, and it doesn't come in at year end, but they still want it. Right, so what do you do? Well, going into the next year, you know, when it comes in, it'll be matched up with that encumbrance from the previous year. And that expenditure will go on the previous year. You know, so it'll actually be transferred to the previous year at expenditure. It won't be expenditure in the current year because we have our new checkbook. And we didn't have the copy machine on our new checkbook. We had, you know, it was still on from last year. The only thing we would put on there is if there was a difference between the encumbrance and the actual. So you know, they very well balance that out by saying, okay, well, if it comes in at more than the encumbrance, then we have an expenditure or a reduction in expenditure if it comes in for less. So hopefully that's not too much, but the idea is that whatever that difference would be, it would be at year end. Okay, vouchers payable. I think these are those the only two? Come up with a. Running out of colors here. Ah. This is the hardest part about accounting, figuring out the colors. Now we'll do it then. Okay, so we have vouchers payable. We have 109,000. And vouchers payable down here. 166. Now you'll notice it looks like those match up with the expenditures, right? So we start out with 175,600. Is that right? Yeah. All right, and we paid down here. We paid 170 of those. Any vouchers payable is. So these are kind of questions they would have in the CP exam, either through drop down or through multiple choice questions. And so these vouchers payable going to the next year, they would still be being paid out of the budget. And remember that, for instance, these taxes that are coming in, and so far they've collected 148,000 of them. But they will still be collecting these up to 60 days into the next year. And however they came up with that, I don't know, but that's the rules. So it's not unusual to have them still paying off bills from the previous year and still collecting money from it in the following year. Okay. Question on that? Okay, so on the test, you're going to get some of these journal entries. And let me go back to the. Oh, so explain problem. Okay, here, let me go. I'm just going to pull up an exam. I'll show you. It'd be easier just to see it rather than me try to explain it. Okay, I'll pull up the B exams. How about that? All right, so and these are in Word and in PDF. And you'll go through and make these are all general fund accounts. Now, this statement of activities, you can do it in the PDF or in the Word document. It's on there. You can do it in here. The amounts are down here. It's just like the handout we did in class. So you can do it in either the Word or the PDF handout. You can also do it, though. I also sent along an Excel one. So if you want to do it in Excel, which might be a little quicker, you can do it. Now, you do not have to do it twice. Okay, so if you do it in Excel, you're just going to hand in both of them. So if you did it in Word and Excel, turn in both of them. Leave it blank on this one. You can leave this blank if you turn in the Excel sheet. So you don't need to take the numbers off the Excel and plug them in here or anything like that. So you just turn in two different documents. You turn in either the Word document in the Excel or the PDF in the Excel. If you do it right on the test itself, for either of those, you don't have to turn in the Excel one at all. So, but you do not have to turn it in twice, right? You do it once. Any questions on that? Did that make it more confusing? The Excel file is there. You do not have to use the Excel file. Okay, I'm going to send it out though with the other test, with the test, but you do not have to use the Excel. It's optional. So you can do it either in PDF or Word. When you get to number 10, if you want to, you can do it in Excel and then just turn in the Excel and whichever PDF or Word file you also do. But you do not have to do it twice, and do not take the time to transfer it over from one to the other. You don't need to do that. Any questions? Okay, that is it for the class. Yay. I will be here next week. Next week is week 16. I will be here where there will not be any new material covered, and it's not, you don't need to come to it, it's not required. No new material, again, no new material. And, but if you have a question, and it could be a question on the test, it could be a question on anything else, but I will be here next week at 6 o'clock. If anyone shows up, and you know, we'll go over wherever you need to go over. And if anyone knows what fossils are, I found this fossil when I was like in 3rd grade. And I
Wow.
can't find out what it is. And I sent it to different people and they don't know either, you know, so if you are a paleontologist, could happen, you know, yeah, if you know what this fossil is, let me know. So it bugged me that I didn't know what it was back then, and it really bugs me now because I still don't know. But anyway. All right, well, I will see you guys. Hey, look at that. Not even an hour. I will send you out the exam. It'll be probably in like the next, I don't know, 15 minutes or so. And that'll be it. It's due on Friday the 5th. Comprehensive problems due then too. I'm gonna check and just make sure I have both those in there before I sign them off. Comprehensive problem, and yeah, okay. And again, the Excel part of it is optional, but if you do it in Excel, you do not have to do it, the problem 10. You do problem 10 in Excel, you do not have to do problem 10 on the exam in Word or PDF. Okay, well, great having you guys, and I'll be here next week if you want to tune in for any reason.
You do it on the paper as well, right?
Absolutely, absolutely.
All right.
Yep, same as before.
Okay.
Sounds good. Thank you so much.
All right, see you guys.
Bye.
Thank you, Professor.
Thank you.